Okay, Bill, so I have just bought your books and I am a brand new entrepreneur. What's the very first thing I need to do?
The first thing you should do is make sure that whatever you're concepted is financially viable, right? So, and there's a way to do that. It's analogous to your home budget, where your budget at home, you have a net income of $2,000 after taxes. So you put $2,000 on top, you then subtract rent and gas and whatever, and you take all your expenses for the month, and the bottom is, if there's anything left over, you put it in the savings account, right? That's what you do at home to make sure that your plan is financially viable. In the business world, you do the same thing. It's called a pro forma P&L, profit and loss statement, or income statement. It's called a P&L income statement. And top line is called revenue, right? And from the revenue, that's what you collect, and you do it, in this case, you do it in cash collections. You subtract the cost it costs you to deliver the product or the service, subtract the cost of the product from what you sold it for, equals gross profit, gross profit. From that, you subtract all your business expenses, and hopefully there's something left at the bottom, right? And that's called the bottom line. If your expenses are, you get the picture, right? So if it's a startup, you're asking about what's the first thing you do. You want to model your business. So you put one of these together either by month or by week, whatever makes sense. So let's say it's by the month. So month one, let's say you have zero revenue because you're just getting started. You have expenses, so the bottom line is negative. You then go to month two, you do the same thing. Let's say you still don't have any revenue. Still another negative number. Month three, you get a little bit of business, little bit, but not enough to cover your expenses. Bottom line's negative, but a little less negative. And you keep doing this until at some point in time, the number goes to zero, right?
What's that called? That's
called the break even, right? And hopefully you can continue to do it and see how you're going to get rich and famous out here. But for the starters, that's what you do. You see what is it going to take to get to the break-even point. Now, having done that, you go back and you start to tweak it, because it probably isn't quite what you had hoped it to be. So you tweak it and you mess with it a little less here, a little more there, or vice versa. And you ultimately get something that makes sense. You might also get something that doesn't make sense. And if it doesn't make sense and you can't quite make it work, this is a good time to stop and think about doing something different, right? And whatever you do is a good time to stop and keep your wallet in your pocket. So the first thing you're going to do is model the business from a financial perspective. I didn't do test market. I didn't do any of that.
Before you spent your first dime.
I don't. That's right. I don't want you to do. I want you to make sure that if it all works perfectly or works reasonably, that you can make money at this and be happy with it, right? So that's the first thing you do. And now, if it is viable, then the next question you're going to ask is, how much money do I have to come up with? And the way you do that, you just take the same spreadsheet, look it over, add up all the negative numbers, and you get a sum total. So the spreadsheet is telling you, if you add them all up, it's going to cost you $20,000 till you get to break even, right? Let's just say it's $20,000 to break even. That's what the spreadsheet says, and you made it say that because it's all your numbers. I'd suggest after you do that and it says 20, double it, and you have the number you need to get going.